All right. Good evening, good morning, good afternoon, wherever you are on this beautiful planet. Welcome to the Inner Circle Live Asian session. I'm your host for tonight's session, Benny Allen, and I'm definitely happy and grateful for all of you being here with me this evening to close out the week. So, without further ado, let's make sure that we turn off any and all distractions. Grab a pen and paper for notes, and let's make sure that we participate and engage in what has been a pretty crazy week in the Forex market. Lots of movement. So if you can hear me loud and clear, drop me a one and we can check out these charts. Awesome. All right, let's go. Let's see what's setting up out here in the market. Sorry for the delay, everybody. I was having a little bit of a sound issue, but I think I am good to go. I see you all made sure that you had the right link. We definitely have to change that up pretty much on a monthly basis because we do have some security issues from time to time. So, yep, appreciate it. So let me click over to the calendar, and we can see today we had the ADP non-farm employment change, and it was a miss, right? It came in at 128K. Now, a lot of times people look at this as a potential precursor for how the non-farm payroll will go tomorrow, which that is at 8:30. So you got the non-farm employment change, unemployment rate, and average hourly earnings report coming out. So three major reports that investors have to get their heads wrapped around quick, fast, in a hurry. But it doesn't always play out that way. We've seen it, especially last year, where we had a big miss from ADP, and then it came in well above forecast in one situation for the non-farm payroll. So I don't know, how tomorrow is going to go, but it was a big enough miss today that it made the front page of Trading Economics. U.S. companies add 128,000 jobs, at least since 2020. Okay, so it was a concern. You saw the dollar take a hit. So, the dollar can act both as a safe haven, right, a risk off and a risk on currency. And today, right, it took a little bit of hit. It was gaining a little strength as that safe haven, but you start to see the risk sentiment start to creep down a little bit more today, 1701. And that was mainly, you got positive news where it's like, hey, they're lifting these restrictions. They're lifting these restrictions in China, especially really benefits cities like Shanghai and things like that. And then just the hopes of Saudi Arabia being able to produce more oil potentially in the near future that can relieve some of the pressure that people are feeling, and companies and corporations and everybody, in regards to these high energy prices. So you saw the shift towards some more riskier assets today, like the Australian dollar, those risk on type currencies, the New Zealand dollar. We're seeing I'm still long against the Swiss, but you did see it. You have seen as of late that the Swiss kind of hold us on a bit. It's not totally tanking like the yen, because they are starting to get some inflationary pressures creeping in to where the cost of things are starting to go up. But all in all, I'm bearish on the Swiss dollar. But when you look at that Aussie and that New Zealand, when you look at oil bouncing back and forth, but still, moving towards the upside, you saw the dollar lose a little bit of steam. But non-farm payroll is tomorrow, so some things can change. So we'll see how that plays out, and we'll look at some of the key technical levels this evening, dealing with some of the U.S. dollar pairs. Australia continues to have strong, domestic data. So when you put that together, you say, hey, they just had a rate hike, and that kind of just gives investors a little bit more confidence in thinking that you may see more rate hikes as we move forward, more aggressive rate hikes. And of course, Canada still benefiting from the interest rate hikes that came out this week. So a lot of things going on the currency front. We go to trading economics, investing.com. We see stock market today, Dow closes higher as tech rebounds, jobs, data eyed for Friday. Okay, so we got a slight rebound led by tech, which when you see that, you got tech rebounding, that means we'll take a look at Bitcoin and see what it's doing in the crypto sector. But here's the dollar, right? So we saw it create, a new support, and we're right at this 236 level, and then you saw it come into the day, and we got that downside push. So it completely took back those gains from the previous day, and now we're kind of hovering here at support. It'll be interesting to see what happens overnight. As we know, we've got the non-farm payroll coming up tomorrow. Sometimes you'll start to see the market move a little sideways with those dollar crosses, especially when that non-farm payroll data is due to come out on the first Friday of every month. So we'll find out if this zone is going to hold, and price will push right back up, or if that data comes out, misses forecast, we could see a further dollar decline. But you got some good technical levels setting up. That kind of lead me to think that the numbers may come out all right, but I can't call it, right? I don't really like to try to guess that. Just kind of wait and see what happens. So that's where we are on the dollar index. We'll take a look at oil as we move towards the end of the week. WTI crude. And welcome to everybody that just joined us. Want to make sure you have access to your microphone. Okay. And so let me fix this. We'll come down to the 4. And we're looking at it. I was just hovering around this 116. It broke it before and came right back. So this is the key level. But we're looking for a further push up back towards this high here. Okay, that's our target. That's our target there. So, and so far it's taken a long time, but that's oil, and we're getting closer and closer to that zone and that fib finishing out. So nice move. Anybody still holding oil in the group?
Yep.
Yeah. Good job. Congratulations. I know you've been real patient with that one. So Reese, I'm in it. Congrats. Yep. So whether you're a real accountant, you're starting out, you're in demo, it's good to jump in and see what the price action can do for you. So awesome job on that. And when you're getting gains from oil like that, you don't feel too bad at the pump. I know it cost me, I think $80 today to fill up the tank. It was $80 plus, I think it was. I was like, that's all right. We got oil on the docket. So we're good. Kind of hedge it a little bit, I guess. We look at it like that. I don't know. But get a bike. That's a good idea. Yeah, that'll help me get in better shape too. Tell you that. So that's where we are on oil. We'll take a look at gold. Okay, we can kind of guess what's going on, right? Just fundamentally, when you think of what's going on with the dollar, you got gold versus the dollar, the pair. Before you even click on the chart, you can kind of have an idea of what might be happening with gold. That's the beautiful thing of combining technicals and fundamentals. Okay, so this is where we are, still pushing. So we're in the key zone. This is the 4 hour. We're in the key zone here, coming up here with a 61.8. Just ahead of non-farm payroll tomorrow. So this is going to be quite interesting to see how these levels play out. So that's gold. Anybody take gold to the buy side? Anybody been long on gold in the group? Right? I remember we had that new AB boundary. It seems like not too long ago now, but it's pushed up. Joy, I was awesome. Yes, 1900. Woo! All right, good job. Hey, Beverly, speaking of Beverly, you helped me make some money today. Dominique, yes, awesome. So we're gonna drop some where am I at here? Some 7s in the chat because, hold if my charts will work right, on this Euro, Ozzy, she called it with the butterfly pattern on the 30-minute. I don't even trade the 30-minute. But I did last night. So thank you for that. That was a huge move. Great observation. The level held, right? She said, look left, man. Look left. All right. So look. Good deal. Thank you. So really appreciate that. As a huge move to the downside, right? So right around that zone. I mean, it's a big mover. It's the Euro Aussie on a 30-minute chart. It's correcting now. So, yep. Teamwork makes the dream work. So with that being said, let's keep teaming up on these pairs. Take a quick look at some of these dollar pairs just ahead of tomorrow. We're going to move through kind of fast as we close out the week. I want to try to get through as many as possible with non-farm payroll being tomorrow morning. So this dollar Swiss pair, right, is just pushing down. Okay, mainly due to dollar weakness is just continuing to push down. Right, gap back to that 382 on the 1 hour. If you come to the 4, right, you see how it's just driving itself down, staying below the support at 96.50. But this is the main one that I'm paying attention to ahead of non-farm payroll tomorrow. Okay, so it just becomes simple, right? It's either going to break that trend line and start to move up, break back above 96.50, or it's going to continue down based on the results of that report. So it will be interesting. Just know that it's a series of reports tomorrow. So there's always that initial reaction, and then what happens after that initial reaction when the dust starts to settle and the picture becomes a little bit more clear. So we're always cautious, and we really don't like to trade it. We just kind of wait to see what the price action is going to do, and then we look to get involved after that. But so this is your dollar Swiss, right? This is where we're sitting, coming off of this high. I just ran the fib to the downside because that dollar got bearish. All right. So just continuing to keep an eye on that. Hey, we know if it hits that D extension right at a key monthly support at 94.72, we may see a reaction there. All right. So we kind of just flow with it. The market will tell us what we need to do. Okay. If you go to the daily, you can see right there where it's holding at that 96.50 level. And here's that support right around that 50% pullback on the daily chart. Okay, so this will be an interesting one to watch tomorrow. So that's the dollar Swiss. Any questions on that? Where these technical levels and where price is setting up on a lot of these pairs right here at the beginning of the month is pretty clean cut on a lot of pairs. So okay. All right, so we'll take a look at the UCAD, right? We know the UCAD is still gaining strength from the interest rate hike. And if you see here on the 1 hour chart, we didn't get that deep correction that I like. But it's pushing down towards that D extension. So Dominique, you say the NAP, I think you're talking about the non-farm payroll report, right? So if you come here, yep, non-farm. So you slide down, you come. Okay, so you're looking at the unemployment numbers. All right. So if we where are we at? Friday, June 3rd, right here. So if we scroll down, percentage of total workforce that is unemployed and actively seeking employment. Actual less than forecast is good for the currency. So that's for the unemployment data. So that's one of the reports that come out, right? Because if it's less than forecast and you got people working, right, that's a good sign for your economy. Okay. Then we come in here and we look at non-farm and we say the change in the number of employed people during the previous month, excluding the farming industry. So that's why it's called non-farm. Actual is greater than forecast and good for the currency. So this is vital economic data released shortly after the month ends. The combination of importance and earliness makes for hefty market impacts. Job creation is an important leading indicator of consumer spending. All right. When people have jobs, they spend. right? We got to spend to keep the economy going, right? That's why when it was slowing down, the Fed started printing money and said, here, go buy TV, go do something, go support your local business, because we can't let the economy go. All right, we've got to print this money. So when people have jobs, typically they spend. All right, so this is a key indicator, right? So then we look at the average hourly earnings tomorrow, change in the price businesses pay for labor, excluding the farm industry. Actual greater than forecast is good for the currency. Okay, it's a leading indicator for consumer inflation. Why? Because of spending. So think about it. You had people who, when everything started clear, it was like, I'm not going. People were walking away from their jobs, and then you had all of these jobs being created, and then you had a record number of job openings, at least here in the United States, because people weren't going back to work. Right? They're like, I've got side hustles now. I'm not coming back to that traditional job. So what happens? In order for employers to try to entice you to get back to work and to boost the hiring numbers and to fill those positions, they have to do what? Pay people more money. So this has been a perfect storm with inflation coming for quite some time, because now you got hit with everything. You got hit with COVID, major hit to the economy, major slowdown. The Fed has to start printing money. So here in the United States, household wealth actually grew during COVID because the Fed was printing checks. What do people do? They spend that money. Okay, now there's a lot of money flooding the economy. That's going to make the market heat up. Red hot market. That's why you saw the inflation's coming. And then what happened with COVID is because you had supply chain issues because of all of the lockdowns, right? There were people in the United States thought they had it bad. There are people who had way tougher, Australia, China, tougher lockdown restrictions. So now it's a global economy. So you get the supply chains, right, to tighten. So now you've got consumer demand, people with this money on their hands wanting to spend it, but now the supply, right? So when there's lots of supply and high demand, prices go up. So it's just been a perfect storm. On top of that, you throw the war. Then you have people, the great resignation, at least here in the United States, where people said, I'm leaving, I'm not working. So now you got to pay people even more money to come back to work. And what happens? They spend the money. So inflation, the market gets red hot with inflation. So that's why they're rushing to raise interest rates now, because for an entire year or so, they said, hey, it's transitory. It's mainly due to supply chain issues. We project that the supply chain issues will get corrected and inflation will come down by the natural forces. Well, that didn't happen. What was transitory, meaning temporary, became more permanent. And now the Fed is like, uh-oh, we got to pull that interest rate tool out of our belt to try to bring things back under control. But it's hard when you have so many different variables happening at one time, because then the war hit, paying more people to go back to work. If you pay more people more money, they're going to spend more money, right? So that's why all of this is tracked. That's why it says a leading indicator of consumer inflation. When businesses pay more for labor, the higher costs are usually passed on to the consumer. So that's the other end of it. So that higher cost is getting passed because they have to pay more for the labor. It's more expensive for them to produce goods and services. So all the way around, it's just been a perfect storm for the inflation that we're seeing now, just not here in the United States, but globally. So that's why everybody, right? This is always an important day, right? The first Friday of the month in the markets. No matter what asset class, everybody's watching this. Okay. And now there's extra emphasis on it because inflation is out of control. All right. So 3 major reports. And anytime you want to, just a quick way to educate yourself on that is just click on the folder, right? It'll give you the details of it. So that was a great question. Glad you asked. All right. So, all right. So looking at the dollar CAD, right? We got the weak dollar, okay, that weakened today overall, still correcting. And then we got the Canadian dollar that's seeing some strength. So that's where we are on the 1. And then if you look at the 4, you can see where we're hanging in at. So as we go through these dollar pairs, just say this, look at the key levels and where price is on a lot of these pairs as we head into non-farm payroll tomorrow. So that's your 4-hour fib coming to the downside on the UCAD, hanging around that 80-20 zone. Okay, but we'll see what happens tomorrow with non-farm payroll. That'll set us up probably pretty good for the month. after that report goes, at least on the dollar pair. So let's take a look at the dollar yen, and we can see we're getting that correction now to the downside. Now, as we see, we posted a lot of yen crosses, and they just everything kept making a run against the yen, right? Yen is weak, mainly due to the fact that the Bank of Japan is definitely lagging behind in monetary policy, right? So they're, especially with the Eurozone saying, hey, there's a possibility we're gonna have to raise these interest rates. You still have the Bank of Japan still holding a negative interest rate and saying, we're just gonna let it play out. We're gonna let the market dictate what happens, and we think we're gonna be okay. We may be feeling a little bit of a squeeze now, but we're gonna continue to let things, remain as they are. Okay, so that yen is weak, and a lot of currencies, right, gaining that strength, continue to make the run. So we didn't get a lot of the trend line breaks that we were looking for on some of those 80-20 plays. It just kept running, but that's all right, because there's always another fib. So even if you were looking to buy the yen, a lot of these pairs buy against the yen. A lot of these pairs are so impulsive to the upside, they didn't really give any deep corrections or even shallower corrections to get long, right? So we'll see that as we go through the charts. But this is correcting now, right? So this is that B to C move. And that's cool, because it'll be a beautiful thing if it comes down into one of these zones and we get positive US data tomorrow from non-farm payroll and all the reports coming out. Then that would look long, because I do want to get long with the dollar against the yen. So I'm really looking for a nice discounted price to kind of get long. Now in this 4 hour here, see, you got price that broke this trend line after this shallow retracement here. So what you're looking at on the 1 hour is, if I can zoom in here, hold on. What you're seeing on the 1 is this leg here that broke the trend line, and you're seeing it starting to correct. So that's what you're seeing on the 1. So I would like to see that pull back, right? And then continue long. But everything is going to be hinging on that data tomorrow. So we have to wait and see what's gonna happen, right? So positive data will push that long, right? You have a long continuation. But if you get it coming, sometimes you get it come in right at forecast, right? Or if it just barely misses, you will see a correction, to the downside. But overall, just in my mind, I'm long on the dollar yen. Is just trying to get a good position to get a good entry on it. That's what I'm looking for. I don't want to sell it. That's not my medium to long term thought. I'm still a dollar bull over the long run with more interest rate hikes to come. That's my thought process right now. So I'm kind of just looking at it. It'd be nice if I can get a decent correction to get long on that. Whether that comes, I don't know, but that's what I'm looking for, is to stay long on a dollar versus the yen, because you have your other commodity currencies, like the Aussie, like the New Zealand dollar, they're benefiting right now because you've got a bit of a change, right? You've got kind of that risk on sentiment creeping in right now. So your commodity currencies typically do well, and your safe havens, like the Japanese yen, not so well during those risk on times. So I just want to see if I can get a decent correction on this thing, and then a long play on it. Okay, off this leg. All right, so it'll be interesting, because I don't know if it's going to correct deep in this zone. This has been a pretty impulsive leg. So when a fundamental report coming up like tomorrow, it's kind of hard to tell. So we'll just wait and see. Any questions on the dollar yen? Let me zoom out, right, just to show, right, how it's ranging on the daily. I should have did that first, right? This is a little bit of a different play when you trade the range, right? So we know we've got this AB boundary on the daily that's got a shallow retracement, but it's ranging. So I should have started by going to the daily, but we drew this up a while ago, and it's kind of just playing within the range. So we'll see how that one goes. but we need a catalyst, right? So we need something to go down tomorrow, so we can make our next decision on the dollar yen. Dollar yen, dollar Swiss, dollar CAD, right? We covered the dollar CAD, right? Somebody dropped me a 1. I want to make sure. Maybe we didn't. We did? Okay. All right. Okay. So we see where it's sitting. We see where these things are sitting. So I want to check out the Aussie dollar. Okay. And I think we drew this up like, I forget when I posted this, maybe earlier in the week. And we were looking at a possible correction here at this level. We didn't get it, right? The Aussie got strong. The sentiment started to shift. So we didn't get a deep correction to get long or to play the B2C move, but it continued to push. And we had this zone here highlighted. Okay. We had this zone here highlighted, and that's exactly where it is now, ahead of non-farm payroll tomorrow. So this is going to be quite interesting. This is going to be quite interesting. So we can see it's kind of just moving sideways right now, but it's up against a daily resistance. So if we zoom out, what's really cool, right, is that, let me pull this out. We had a 50% pullback right up against daily resistance. And we saw price get bearish all the way down to this point of U-turn right before the de-extension. And now look, we're right back at this level. So you've got a double top look here. Okay, so that's quite interesting. And right, when you look at your stochastic, we're definitely overbought on the Aussie dollar. So, you know, whether it's a short-term correction, you know, or something longer term, and we get dollar strength, I'm definitely looking for a reaction at this level. Okay, definitely looking for a reaction at this level. So these are ones to just be patient, be that lion sitting in the bush, right? Gotta be patient and just wait. So you look at the 4-hour, here's that level. Okay, here's that level, like so. Okay, see it? Key zone right now. Key zone just ahead of non-farm payroll. So this is one that I'll definitely have my eyes on tomorrow, looking to see what type of reaction we get coming from those reports. Any question on the Aussie dollar? Good. Okay, awesome. So let's look at the Euro USD, and you see how this is just bouncing around. So if we zoom out, let me go to the daily. Okay. And you can see how we're kind of, hold on one second. We know that Euro's got the boost, you know, from the possibility of hiking interest rates for the first time in a very long time. And you definitely have different ECB members, European Central Bank members, coming out with a hawkish tone. Some of them are super aggressive, more aggressive than President Lagarde is at this time. But people are saying, hey, something's going to have to get done with inflation. So you can see the market starting to price that in. So we broke above this 107.3 level, but it's kind of just bouncing back and forth just ahead of the non-farm tomorrow. If we come to the 4, you can see it hit that 382. We talked about that before. We know we have people that took that buy. Really nice play. But now we're kind of just bouncing around and hanging around this level. Okay, so we want to keep an eye on that tomorrow, right? So if we get positive data for the US, then we should start to see this move down. Okay, price move down. If it's the opposite, right, we look for price to move up. Okay, now sometimes on non-farm payroll days, you won't get any fireworks. Like between all three reports, if investors come away with a mixed sentiment, yeah, we came in at forecast on jobs, but wages went down or something like that. Sometimes you'll get the market to go back and forth. That's why we always say wait, right? Because a lot of times, especially when you're a newer trader, you think, oh, all you hear is non-farm payroll, and you don't realize that there's multiple reports. Okay, so you'll see the market jump one way sometimes and then go the other way, right? And so you get a lot of stops taken out when you talk to brokers. One of the days that's the worst for a lot of traders, and where a lot of accounts are blown, are on those non-farm payroll days, because they're trying to trade the price action right as the report is coming out, right? And so that's not necessarily something, especially if you're newer, that you want to try to do. You kind of just wait, see how investors are filling it out, and then try to figure your game plan out from there. So that's where we are, kind of just bouncing around. We got a question? So that's where we are, sitting around. It just keeps challenging this area. This 107.67 level. It just keeps pushing up against it, and we'll find out tomorrow exactly what it wants to do. Any questions on the euro dollar? Good. All right. We got a hand raised. S Forte. Yes. There you go.
Okay. Hey, so okay, I do have a question. When you were mentioning the payroll reports, I believe, what do you mean? I mean, I know, I understand what the reports are, but okay, so it's here on this site.
Yep. You can go right to forexfactory.com, and then what you do is you just, anytime you want to learn about something, right? This is actually where I started out. Before I started going into subscribing to different stuff, and Reuters and Bloomberg and Trading Economics and Investing.com. This is where it all started for me, because you can click on these folders and it'll tell you exactly what it is, and then they'll have different reports. And so then you just start to kind of go down that hole, and before you know it, hours will go by, and it's like you just become heavily educated in this one particular report, and how it impacts the market, depending on whether it comes to positive or negative. So this is actually where I started, because when you first start in a game, before you get some education behind you, people be like, if you see a red folder, don't trade. and that'll just be it, right? You know what I mean? Like, it's almost kind of like red light, green light in a way, but it's not so simple all the time. And so, like, you can go here and start reading about it. You can look at the historical data, bank account. So you see here, like, reports coming out, and so you'll start reading the markets, just like the pros read the markets. You'll start
okay,
speaking.
and these are
the same language.
Sorry, go ahead.
Yep. No, go ahead. I'm sorry. I'm done.
I was going to ask, is this like once a month that these reports come out? I remember one of the training class, it was talking about some different reports, but I'm talking about this specific one here. Is this like monthly?
Yeah, this series of reports here: unemployment, non-farm payroll, average hourly earnings. That's the first Friday of every first Friday of every month.
Okay.
Yep.
Thank you.
So that's the first Friday every month. And as you start to focus in on these reports, you'll see that there's just reciprocal. You'll start to see we're going to a new month, and then you'll start to see GDP data, for each currency. You'll start to see the CPI reports come through for each country. on a regular basis, because this is your catalyst. This is the gas in the engine here. This is what makes that price action that you see on the chart. It's making it move, right? It's making it move. So sometimes you hear us always say, like, man, we need a catalyst, right? What's the catalyst going to be? Like, we have a trade idea, but fundamentally, what catalyst would make that make sense and make that play out, you know, against what we're thinking about? So it's just an extra confirmation piece for you that's very powerful, that can give you an edge in the market. So great question. Great question. So that's where we are on a Euro USD. And you can see here, just by looking at your Euro index, that it's gotten a boost, right? The Euro's gotten a boost as of late, coming off the lows, okay? And it's just kind of just moving sideways now, all right? So again, okay, it's always good to review. Look at your Euro USD, okay? And then you look at your DXY. You look at your DXY. So we go to the 4-hour and we look at your DXY, same move. Why? Because the DXY is heavily weighted by the Euro. So it's the inverse. It's the inverse. You look at the dollar index and you look at the Euro USD, it's the inverse. Okay. So it's like looking at it flipped upside down. All right. So I want to take a look at the pound dollar. Okay. Here. And we see it's kind of just hovering in this zone. It's moved up quite a ways off the low, right? That's that 80-20. Right. So in your 4-hour, that's moved quite a bit. Right. At its high point, that was 436 pips. Okay. So from May 15th through the 26th, it's quite a move. Right? And these type of moves happen all the time. If that was going to push to that 382, it's 226 pips away. Okay. So we know in this pair, the dollar is the counter currency. Bad US data tomorrow, you're going to see this pound most likely push up. Okay. Good US data, you see this pound turn over. Overall, you can see that your pound overall is bearish, right? So if we go to our technical summary and we look at the pound, okay, you can see it, right? It's just short. But when you get to the dollar, see how it's a mixed bag across the time frames? So when you look at a report like this, and then when you look at the technicals, you're like, that makes sense, right? Because it's kind of pushing sideways, right? When you look at it, these other pairs, look, sell across the board, sell across the board. Everything got pretty much busy against the yen, right? So you'll see that universally. So you can line up all these data points to really help you out in your trading. Now, sorry guys, I hate to stop in the middle of what I'm doing, but I got a question. One of the members inboxed me about currency strength, and I don't pay a subscription or anything for currency strength, and I rarely use it. But if you like it as another data point, back in the day, one thing I used to use, this is livecharts.co.uk. I'll share this, but this constantly, they have their own currency strength meter type of scenario, right? And it constantly updates throughout the day. When you look at currency strength, that's a very simple visual, okay, of your major currencies. Okay, so I'm gonna take this and share this. You guys can check this site out. But if you're looking for something that's free, I know they have where you can, I forget the names of some of them out there, where you can pay a subscription and things like that. And they have, different things you can add on MT4 for it, but this is, a free site for all of you. So I'm gonna put this in the chat if you're into the whole currency strength thing. All right. So there you go. So now you got that. All right. There, before I forget. So this is where we're at. We're kind of just moving. This may move sideways until we see something happen tomorrow with the report. If I come down to the 1, right, this has just been that move to the upside, and price is kind of just holding. So price held ground here, okay, held ground here, and double bottom. okay, in that zone. So we'll wait and see. We'll wait to see. Now, if the report wasn't coming out tomorrow, I would be definitely hold steadfast to the 382, but you never know what's going to happen with the report tomorrow. And we always say there's no technical framework or structure that'll ever stand in the way of a strong fundamental occurrence. Okay, fundamentals drive the market. So if you're in this still long and you're holding to that 382, just manage it. Manage your stops, move your stop up. If your stop was down here originally, right, we want to start to adjust our stops. Okay, we don't want to give money back to the market, right? If you're up, you've made money, maybe take, a half, 3/4 of your position off ahead of the report and adjust your stop. Okay, so if you're in there at $3 a pip and you're up big, go in there, close out, right? Close order, take out $2, close it, leave $1 running, and adjust your stop on that dollar. Okay, just to stop on that dollar, because we do, and that's with any pair ahead of any type of major fundamental report coming out. Just make sure that you protect capital. That's the number one job, is to preserve and protect your capital. So if you did all the homework and made the right analysis to get you to this point, okay, then make sure you manage your money wisely. And at the end of the day, if you're out on this and you're saying, hey, I'm bearish on the pound dollar, which the pound is bearish, I'm actually bearish overall, this is just a correction to the upside, you might still just be waiting for that high price on the 4-hour anyway, so you're not doing anything right now, right? You may be saying, I need this price to push long into my zone, and then I'm gonna look to short it. Okay, I'm gonna look to short the pound dollar. So that might be your play. So either way it goes, right? Just make sure that you're smart in how you go about things. Any questions on the pound dollar? Good. All right. Okay. Tomorrow will be interesting. Okay. Hold on, give me 1 second. All right. So that's the pound dollar. Did we cover all of it? We covered Aussie. Did we cover the Aussie dollar? I think we did. Aussie dollar. Yep, we covered that. We covered the Aussie dollar. So I think we got all of the dollar pairs out of the way. So I want to, with the time that we have remaining, I want to go into some setups that I'm eyeing up as well. Let me see here. This Aussie Swiss, okay, on your one. All right, so I've been holding this long, playing this long, but we are in a situation off the one where we could be seeing a correction back to the downside. I do plan to stay long on Aussie Swiss. I'm not looking to play a B2C move or anything. Yep. I saw that one too. We'll go over that one. Good eye on that Swiss yen. So I want to, they're starting to pop up all over the place. They got some good price action going. So I'm not looking at, to take it to the 382 or the 61.8. I just want to, in the situation I'm in now, I just want to see a pullback and a correction so I could potentially add to a position. So, but if this is your initial play and you're trying to get in and get long on the Aussie Swiss, this may give you the opportunity here. Just be patient and wait and see if it wants to push down for a low price, right? Because this is the move here. So this is an extended move long, and what we're looking for off this 4, right, is just a correction. Right? We're looking for to see if we can get price to correct before it continues long. Okay, so not as clear on the 4, but if you go to the 1, that's a clean fib right there. Okay, so pull back and then a continuation if you're looking to play that one. Any questions on the Aussie Swiss? Okay. All right. So we show you both ways. If you're a trend type person only, These setups are beautiful as well, because then you're just waiting for your low price, right? So if we take a quick look at the Aussie index, we see it's pushing bullish, okay? Off the lows, your commodity currencies have gotten a boost, okay, to the upside. All right, so take a look at this Aussie yen. And if you look on the one, there's a brand new fib, right? So we were looking for a correction. We don't always get it, right? We use those confirmations. Hey, well, man, you know, didn't get quite a good, strong enough trend line break, right? But hey, it ran. You got a new fib starting, okay? We didn't get this deep correction like we like to see to get long. We didn't get that B to C move at all. It's very shallow. The yen fell apart, continues to fall apart. Commodity currencies got a boost, Australian dollar. This just tells you, hey, I didn't even get a 23% correction. The bulls really have control of the market. So now we eye our next opportunity. Okay. You got your B to C move. Okay. You got your classic 80-20 move. And if you're just long, then you wait for your correction. You wait for price to hit your sweet spot and give you some evidence to get back long. Same thing on the 4. Look, on your 4, on the larger wave, look at you got some beautiful place right here. If you get price to come back here, and you make the decision, do I want to play that to the downside on the 4? Will we get that? You might tomorrow. Okay. You might tomorrow with the non-farm payroll. You see things, you see the yen react sometimes right in line with the dollar doing that report. So here, boom, right? Maybe you get it. All right. Maybe you don't. It's 300. You have to make a decision. Do I want to play that? That's in that 80-20 zone. You get a break back below 94.03. Right. Now, maybe you don't get so aggressive because of the way pairs have been running against the yen. So you just kind of switch your game up a little bit. If you want to play that, right? We don't get scared. We just say, you know what? I'm just going to be a little bit more patient on this. So what I'll need is, okay, maybe I don't play the aggressive trend line break like so. Okay, do this on a lower time frame or whatever. But maybe I don't look to be so aggressive and right off my trend line break, bearish candle close, take it, put my stop above the high. Maybe I don't do that because of what's been going on with the yen. If you do, then you just trade smaller, like Ryan was saying. Maybe I put in 0.25% off the trend line break, right? So I get a trend line break, I enter 0.25%. I'm not going to be as aggressive because we know across the board the yen has been weak and everything's been making a run on it. Okay, so maybe I put in 0.25% there if I take it aggressively, or I say, you know, because of the current climate and because we're gotten back to that risk on kind of environment, even though it seems to change every other day, I'll let it break the trend line, and then I want to see it pull back. If I get a pullback, then if I get a decent pullback, I'll keep my stop above the high, but then I'll see if I can get a fib level like that, right? See if I can get a fib level in on this. And then what I'll do is I'll run my counter trend line off the correction. Okay. Like so. Like this. So I'm just going to be a little bit more patient. And then if I get my break to the downside and price to commit to being bearish, then I'll take my shot. Okay. To leave your stop above the A on that. Of course, we divide our risk by a stop loss, right? Our risk amount by a stop loss. Or you might be the type that says, hey, I got a swing high that formed here at this level. I want my stop loss to be tighter. and I'll move it above the C, right? And get short there, right? So different kind of scenarios, right? So when your conditions change, right, you might have to use a couple, a different strategy in regards to how you want to enter a trade. Okay, look for more confirmations. Any questions on that? Okay. Now, if you're just a bull, then you're just gonna let the trade correct. Like nope. The yen way behind in monetary policy. The Bank of Japan keeps doubling down. They're not raising interest rates. They're not doing anything. Matter of fact, they committed to more bond buying, which is going to put more yen out there in the market, which is going to weaken the currency. Okay, so the currency is kind of collapsing right now. Then you just say, hey, if I can get a decent low price with some structure, then I'll look to get long on it. I'll wait. Okay? Because what happens at these levels is that, hey, sometimes price gets to a high point, people are ready to take profit. They're ready to sell. They're ready to take profit, and that pushes the price down. That doesn't mean that the currency is overall weak. It just means that people are taking profit, right? I take profit, and when price gets back to a low price, I'll take the capital, the profit that I have, and I'll buy it again. Okay, that makes sense, right? Because now I'm playing with house money. Made my money, made my profit. I'm up 5% from the last move that I've made. When it goes back, I'll take some of that 5% and I'll buy the Aussie against the yen again. And we'll stay bullish. Okay. So just something to think about. But that's where we are on the Aussie yen. Any questions? Good. All righty. So that's where we are on that. I want to go and check out. All right, we'll take a look at this Swiss yen. Man, all right, it's sitting pretty high in the zone. See that? See that? It just catches your eye like, man, that just looks crazy. That just looks a bit overextended. Right? May get the D extension up against that weekly, but then that's a really nice play there. Right? But it's kind of teetering a bit. So you got that move there. Okay. And then on your 4-hour, larger wave, new AB boundary. Okay. I like that 136.16. I really like that level. Just no fib, nothing. Okay. If we're just looking at price action, it's a nice level. Right? It's just a really nice level right there. To where if everybody is eyeing it, we might get some profit taking on the way down. Okay, we broke through this level, so we know there's always a possibility of a correction. Score a point, pull back. But this level looks really, really nice for an opportunity. Limit at the weekly level. I like that idea. See what you can get out of it. I can dig it because we broke through this level, So even if you get a correction, maybe it's a minor correction and then up. Don't know how to let it play out, but definitely on high alert for this one. Definitely on high alert. Let me I'll take a look at that. Yeah, we rejected last time. Definitely. This market is amazing. Up, down, and sideways. Up, down, and sideways. All right. So I want to take a look at this cash Swissy. Right. So I'm bullish. Right. So maybe we get a correction and a continuation long there. You can see here, right, where it could happen on the 4. Okay, I would love to see this happen. Okay, so if you're not already long on it, I would love to see that correction there. So that's 75.27. that would actually take this fib out. Right? That would take this fib out. You can see it's kind of moving sideways. I don't know if it'll get there, but it's been kind of, this one has been kind of wild, right? Came down, almost took out the A and pushed back up. All right, so this has been a weird one, but my ideal spot to add to a position here is at this. I would love it to see it retest that level. Okay, don't know if we'll get it, but that's my trade idea for that. Watching it off the 4 hour, I would love to see it come down and get it. So we'll see if that happens. But we would have to get some relief from that CAD and that oil price for that price to push down. So put that on, put your alerts on that one, right? Potential buy limit. You know, sometimes if you don't want to do your limits or anything like that, and you know you're going to be away and you don't have time to wait for trend line breaks and confirmation, sometimes you could just put an alarm on price right here. You can put an alarm on that horizontal, so it'll alert you, and then you can go back and look if you don't want to take a buy limit or anything like that. Like, but I do want to know when it's at that level. Just put an alarm on your horizontal, so it'll send you an email and a text message when it hits that level, and then you can just walk away and do whatever until then. All right, but I'm definitely a buyer, you know, of the CAD versus the Swiss. Any questions on that? All right. Let's take a look at this CAD yen. All right, it's been quite a wild one. We're in the key zone there. This is another one where, hey, if you don't like that, the way it's been running, just wait for the price, wait for a low price. Okay, wait for a low price to buy the CAD versus the yen. Okay. It's been a crazy one. Made a decent correction, then it just took off. Right? There's always a possibility of a deeper correction. That one I'm just gonna wait. I want to wait to buy it. The CAD, yeah. I'm really heavy on the CAD with the monetary policy. I want to wait to buy it. So let me zoom out here. See what we got. So okay. I think, you know, we get a correction and then it may head higher. I don't know if we'll get, it'll take a lot, major situation, right? Risk off situation for that to collapse. Right. So now I'm looking at this extended leg here. We just broke above is 102.95. So I'm thinking a correction to retest if it holds there. So if we zoom in on this, right? We zoom in, you can see this zone. Okay. So if we can get a retest there, okay, see it's pretty strong level. We can get a retest there, and then we've got the zoom back out. The D extension is right here. The extension is right there. Because I just don't know what the catalyst would be to push that all the way back to the downside when we're talking about the yen. Stranger things have happened, but that's the play right now. And then, as you figure off that support, we're over 100 pips to that 4 hour D extension there. So we'll wait and see how it plays out. But I want to buy it. I want to buy that. Okay. Any questions on the CAD yen? No. Okay, rocking and rolling. Okay. So, hey, prices make their runs. People that's been in this group for a while know that. Yen has times where it gets super strong and risk off, and then it gets super weak in a hurry, like it has been. But it lends to some decent setups once it kind of settles down. So we've got this long push off that 38.2 on the EJ. right? Perfect storm. Weak yen, euro seeing a boost from the expectations of a rate hike soon. But what it's done is it's pushed it right into the zone here at this level. Okay. So we're looking at the potential of a double top. Okay. Maybe you hit this level and you get a correction. Okay. Back to the downside. Okay. It's almost 100 pips there. Maybe it goes deeper. But this, I'm looking for to see what kind of reaction. Now, this is a daily chart to see what kind of reaction. You see the reaction here last time? Market told you exactly what it wanted to do. Huge rejection, and then it was down from there. Okay. So I've got to respect that area based on recent past history, right? Based on recent past history. So it was coming into that zone. Last time we hit this top and we dropped right to that 382 almost for 700 pips. Okay. So we're looking for a potential reaction there. If we come down to the 4, as we push up into that zone, way overextended. Happens. Way overextended here. We broke this level. We haven't gotten a retest of that level though. Okay. Haven't gotten a retest of that level. It's clear right there. So let's wait, be patient, see what happens when we come into this zone. See what happens. All right. Draw your trend lines, potentially set your limits, see what happens. All right. Lots and lots of opportunities setting up. Butterfly on the 30-minute. I'm about to check that out here tonight. Should get off 30-minute USD CHL. I better check out Beverly setups. Got me. I got taken care of now. Taken care of with that Euro Aussie play. Like it. So here we are. Look at that. That correction. Super nice. Over 100 pips. But then it's just running straight to the D. And we see we got a D extension on the 1 hour right at that same level. All right. That ran in a hurry. In a hurry to that level. Okay. So there we are. So we just wait and see. That's the Euro JPY. I wanted to look at the pounds. We're selling the pound Aussie, the pound CAD. I wanted to take a look at this GJ. And we're pushing up, right? Kind of familiar, right? The yen pairs. Look at that. So we had all that back and forth a couple weeks ago, right? I was long, some people were short. The argument both ways was pretty solid. Nobody really knew. But it held at that level, right? We marked this level up, and we definitely got a rejection off that level, and it's pushing back up to this 164 level. So that was, look at that. See, it's amazing how this market works. Look at that. Lower lows, lower highs. Okay. Look at that. Lower high, lower low. Then we got the reverse. Look at that. It's really nice. Look at the high, higher low. Okay. Now we're moving into this level. Okay. So you come down to your 4, starting to see, right? I need that correction coming in. Tomorrow's going to be interesting to see how the market reacts to this stuff. So this was beautiful wave, right? C to D, 786 pullback, 127 extension, 532 pips on a 4-hour chart. Worked out nice. Okay. So now we need to see what price wants to do. It's kind of hovering around in no man's land right now. Okay. Yen's weak. So is the pound though. But everything's making money against the yen. All right. So we're at a new AB boundary. The yen is a large pair. That's 200 pips, right? The pound yen only gives you so many fibs per year. It's a big mover, right? So just to that 382 on the 4 hours, 200 pips, 320 pips to the 61.8. And then if you get long off that point against the yen, 658 pips. So there's a potential play there. If you look at the one, right, it's kind of smaller wave, right, showing higher price action. But you can see what it's trying to do. It may correct and turn over and come down. See some things move tomorrow, I think. So that's the pound yen. So keep an eye on that one. I don't think I looked at the NZD USD. I don't think I covered that one. So move this out the way. Get off. So this has been a pretty extended move on his NZD USD. Okay. This could be impacted tomorrow. So we know that commodity currencies made a run. We got dollar weakness. Okay. Because it's correcting. So you got a down AB boundary. Here's your ABCD wave, right? So I push up to that zone, right? Almost 500 pips. And then we push down in a hurry, 820 pips. And then we got a correction. We did not hit the D extension on this capital fib. When you get a drawn out impulse move like that, I start running my sub fibs. And this is what we're looking at now. We got a reversal. It's moving pretty high into the zone right now. It's 328 pips. So what I did was, because it gave me the cleanest look, is I traced over this fib here, like that. And I took it down to the lower time frame. So I linked the object to the lower time frame. And so now I'm playing off of the daily sub fib on all of my other levels. Okay. So we can see price climbing. That's what I want to track. So you run your trend line like this to the upside. That. And we'll see what happens tomorrow with non-farm. Same thing on the one. Okay. Same thing. So, little trend line lesson, okay? You always want to try to get your trend line through the highest price. Okay. So at one point, you see this correction to the downside. Okay, that was my trend line there. As of right now, okay, somebody could take their microphone off mute or whatever and tell me, as of right now, is my trend line, is it in the right position?
I'm gonna say maybe you should draw an inner trend line as well.
You could. So here's a little trick, right? Because you saw this break. So what you do, so when this trend line was originally drawn, it would have looked like this. Why? Because this is my highest point in the trend going up, right? So you try to get to that. Now, you had one touch, two touch, and straight through. So yep, you got a gap here. Now, if you stay conservative, you leave this like that. If you wanted to get, see this here looks kind of funny and tight. But if you wanted to really get that clean, right, and so it doesn't look so tight, just go down to the lower time frame, right? Because you got smaller waves, so your trend line will be even cleaner, right, on your lower time frame. You can technically sneak that one in, right, and it broke it, but you can get a real good look because you zoom in on your lower time frames and you can get a real good look at that on that break. So that's just a little tip. Anytime you have, like, if you're on one time frame and you've got a really like if trend lines are real narrow, sometimes if you go down to the lower time frame, it'll look clean. It'll be a lot cleaner look for you. That's not too bad. But sometimes you guys draw trend lines sometimes, they look like this and they're tight. Just go down to the lower time frame and draw. Sometimes it's like, you know what? That particular trend line that I may have is enough. And if I want to get a tighter entry in an inner trend line break, I'll just go down to the 15-minute and draw the inner trend line off of there. It'll be cleaner. So the answer to the question is no. Right now, this is not correct. This needs to be adjusted. Can anybody tell me why it needs to be adjusted?
You have a new high.
Absolutely. 100% correct. We have a new high. This was your previous high. You see how price it failed to continue to break out to the downside, and it pushed up and it made a new high. So this has to adjust like that across the low. See? Because you have a new high. Now, okay, and this is consolidating. So I always like to draw my trend lines outside of consolidation. Now, okay, and look at that, it's kind of ranging. Okay, so now that's my trend line. Because look how I'm aligned now. If that breaks, now I actually have two confirmations. I got a break of the trend line, and I can wait for a break of support. Okay, like so. Like that. This was your previous high. This is your new high. You have to adjust your trend line. Okay. A lot of people don't know how to do that. So it's a good little lesson, because this high is no longer the highest high. And you want to try to get your trend line through the highest point. You want to map it out. Okay. Everybody follow me on that?
Yes.
Okay. Awesome. Yep. So you take it off the low, right? You want to take that trend line off your low. Yes. So here's the bottom of this trend right here. You want to start at your low. You want to extend it out and bring it up until you get that second touch. Well, my second touch is right here. And we don't draw through wicks or candles. So that's my second touch. So that's 1, 2, straight through. Like that. And I got to get to my highest point, everybody. I got to get there. Right? So now I look at this and I'm like, well, my highest point is here now. So take this trend line from the second touch. So that's 1 touch. Bang, 2 touches right there and straight through. These 2 touches. Okay. Then, right, it's how aggressive do I want to be? Right. If I'm looking to catch those trend line breaks, then I'll take it like this. This is moving sideways. So this is technically my highest point right now. I don't have a closed out swing high, but it's kind of moving sideways anyway. So I'm not going to draw it like that. I'm just going to draw it to the outside of that consolidation because it's moving sideways and leave it like so. 1, 2. And I'll take it like that. Right? Because your trend lines have to determine what? Your direction, the speed and momentum of the market. Right? Your speed and momentum of the market. Okay. And it can help you with your entry points, potential entry points. Okay. So before, and now that I'm zoomed in, it doesn't look too bad. So before, the second trend line would have been 1, and this would have been 2, and straight through. Okay. Because this was my high. So then this is where she mentioned, hey, maybe an inner trend line, that doesn't look too bad now that I'm zoomed in. So like that. 1, 2, straight through. There's a touch right there. Bang. And you can clearly see the direction, the speed and the momentum of the market. Okay. You see the pitch, how it changes as it accelerates, it gets steeper, right? And then you broke. So that told you I've got to change. I got first a change in momentum. Momentum is slowing to the upside now because I got a break. Okay. And now I broke to the downside. Continue to break and change directions to the downside like that. Okay. All right. Yeah. That's it. So that's all I have tonight, this evening, everybody. Okay. A lot of pairs to keep an eye on as we're in the new month. We're setting up non-farm payroll tomorrow morning, first Friday of the month. Let's see what happens when the dust settles. Okay. Remain patient. Always, 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 always. Proper risk management. If you got a small account, no worries. Trade in micros. It'd be amazing how they add up when you know how to catch pips. You do not have to risk it all. Always remember that on every single trade. JC, question.
Hey Benny, could you go
Hey.
back to the 4-hour time frame on this pair?
I sure can.
I'm still struggling with my fibs, and I got
You might have them running like this. I just took the larger one. I took the
okay.
daily. I pulled the daily one down
Okay.
because I wanted to track that one. But
Well,
technically,
I thought I saw a D extension hit. Because I think I'm still struggling with levels and colors, I guess.
right.
Or maybe not. I thought I saw like a blue and blue. Never mind. I don't even. That's not.
It's all good.
It's
It's
not.
all good.
Okay.
But yeah. So that's your 4-hour wave, your smaller wave.
Okay. And just to
That is
clarify, a
progressive.
786 retracement goes down to the negative 127.
127 is your projection.
Okay.
Yeah.
Okay.
That's your projection. And if you get an 86, right, meaning that the market took back 86% of what it gained here, then you're saying, hey, I've got less momentum to the downside. So I'm gonna come in right at a 118.
Okay. Thanks.
So that four kind of lines up with what that sub fib on the daily is doing. So I can kind of leave that other one on the one. All righty. All I have for this evening, everybody. Hope we all learned a little something. You're welcome. You're welcome, Beverly, David. Appreciate it. And hey, good luck tomorrow. Even if you're in the demo, even if you're not trading at all, that's fine. Take a look at what price action does with the non-farm payroll reports and the unemployment numbers and all of that stuff. And then we'll be right back, right? 7 a.m. Eastern Standard Time on Saturday morning, getting prepped for the week. Take care, everybody.
Good night.
Good night.